Ladies and gentlemen, good day, and welcome to the Q4 and FY25 earnings conference call of SG Finserve Limited, hosted by Emkay Global Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kishan Rungta from Emkay Global Financial Services Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. I would like to welcome the management and thank them for this opportunity. We have with us today Saurabh Dhawan, CEO, Sahil Sikka, COO and CFO, and Anubhav Gupta, Group Chief Strategy Officer. I shall now hand over the call to the management for the opening remarks. Over to you, sir.
Thanks, Kishan. Thanks to Emkay Global for hosting SG Finserve for its Quarter 4 FY25 earnings call. I welcome everyone. I'm Anubhav Gupta. I feel really proud to tell everyone the way SG Finserve has created its business model in last 2.5 years since we started this company. Because when in October 2022, the primary objective was to offer bill discounting services, supply chain funding for the main group company APL Apollo, and very quickly we ramped up the loan book to 1,000 crores within 2-3 quarters. And March FY25 we closed with 2,300 crore near about loan book. And if you look at the growth in the disbursements on quarter-on-quarter basis, last quarter we did gross disbursements of around 5,000 crores, which is up 10% on quarter-on-quarter basis, despite the fact that we are facing macro headwinds in the construction material and consumer sectors, plus the overall slowdown which is triggered from the low government spends and the after effects of general elections as the government spendings continue to slow down. When we started, we were a single group customer, right? Today, again, I feel proud to share that we have anchor list of more than 45, which includes groups like JSW, Adani, Bajaj, Tata, Vedanta, and all the major conglomerates one can think of who have enrolled to the products and offerings being offered by SG Finserve. The visibility of anchors what we have today, we are confident that we can take this loan book from 2,300 crores to 4,000 crores in 12 months and 6,000 crores by FY27. And while growing this loan book, we are being very prudent that we continue to achieve ROE of 18 to 20% with ROA of 4.5 to 5%. And this is all possible with the kind of capitalization this company is already having, plus the new capital which will come over the next 12 months with the conversion of warrants. And of course, the bank limits what we have with the top private or national banks within the country. So we are super confident that this business can grow to the scale which will be uniquely positioned as one of the only NBFCs which is supplying a unique proposition, which is supply chain funding and bill discounting for the large conglomerates and groups who are highly focused towards the manufacturing. Saurabh, I would like you to take investors and analysts through the Q4 performance.
Thank you so much, Anubhav. Good afternoon, everyone, and thank you for joining us for the Q4 and FY25 investor call. Trust me, it is a pleasure to be with you today as we close out what's been a transformative year for our company. FY25 been a year of both challenge and opportunity, including the regulatory transitions in the first half, and proud to say that we are ending on a very strong note. The highlights for the fourth quarter: we saw exceptional momentum in Q4. AUM grew from 1,568 crores in December to 2,326 crores by March. That was a 48% quarter-on-quarter increase. In fact, you look at the growth from the first half to the second half, the AUM has almost tripled from 822 crores in September to 2,326 crores in March. Total income for the quarter came in at 54 crores, up from 42 crores in Q3, a solid 27% growth. And profit before tax stood at 31 crores, which is broadly at par with Q3. That's largely because much of our book expanded later in the quarter. Looking at full year FY25, total income was 171 crores, slightly lower than 190 crores, but the decline was due to the contraction in the book that happened during the first half, but wherein from the peak book of 1900 crores, we had to trim down the book to about 766 crores during H1. But the good news is we bounced back strongly in Q4. Our quarterly income of 54 crores certainly translates to annualized income of 215 crores on the current levels. Profit after tax for the year came in at 81 crores, up from 78 crores in FY24, even with the headwinds we faced during H1. The growth certainly reflects that the growth momentum has been recouped. H2 PAT achieved is 48 crores, that we can say that we are on a run rate of 100 crores for the year on the current base. So what's driving the performance? First, we've continued to deepen our relationships with anchor partners and expanded our sector coverage. In Q4 alone, we onboarded names like Tata BlueScope, Eastman, Havels, Shyam Metalics. These additions pushed our anchor MOU flow potential to 5,500 crores, an increase of 500 crores just this quarter. Second, our funding ecosystem has significantly strengthened. All the banks have returned back. We've got 14 banks now and sanction limits of about 1,500 crores, and many others in discussion to fuel the growth for FY26. We continue to maintain strong fundamentals. Our average yield remains at 12.5% and our borrowing cost is stable at 8.5%, giving us a healthy spread of 4%. This consistent margin is a clear indicator of the robustness and scalability of our model. So looking ahead, we remain firmly on track to achieve our loan book target of 4,000 crores in FY26 and 6,000 crores in FY27. We already showcased AUM addition of INR 750 crores both in Q3 FY25 and Q4 FY25. Thus, required momentum is there to meet these numbers of 4,000 and 6,000 for current and next financial year. Our equity base currently stands at 1,015 crores with visibility to grow to 1,500 crores by FY27, backed by equity commitments, that is balance of 75% warrants of 450 crores and flowback of profits. In summary, Q4 and the full year have marked a turning point. After navigating the challenge of the first half, we've come back stronger with renewed momentum, stronger partnerships, and sharper execution focus. We are deeply grateful to our shareholders, our anchor partners, our customers, and of course our team who made this growth possible. With that, I'd like to open the floor to any questions you may have. Thank you so much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohan Mehta from FICOM Advisory. Please go ahead.
Hi, am I audible?
Yes, Rohan, good afternoon.
Perfect. Thank you so much for taking my question. So, firstly, I wanted to understand slightly on the business side. Currently, as of where you stand, what are the top 3 foreseeable and unforeseeable risks that you believe could impact SG Finserve's business over, let's say, the next 12 to 14 months? And additionally, what internal controls or any frameworks do you have in place to mitigate this risk?
So thank you, Rohan, for your question. When it comes to risk in supply chain finance, I think monitoring of cash flows on day-to-day basis is extremely important. We're almost at the final stages of launching our AI-based monitoring tool, from where we will be extracting data from GST portal on monthly basis and capturing the sales, purchases, anchor-wise, state-wise, HSIN-wise, and also tracking the repayments done through our counter, which will help us keep a track the borrowers have utilized their money in the right form and repaid back to us on time. So that is the foremost thing that we are doing, which will help us keep almost a monthly tracker health checkup of all our borrowers. What kind of external factors? There could be many, macro and micro both. Would they impact liquidity, commodity cycle? But I think the way we've been approaching this is the number of days, the churning number of days, which is about 35 average right now, is an extremely small cycle for any such impact, which may be based on the commodity or may be based on the macroeconomic factors. We will be able to absorb that. I hope I've been able to answer this.
Yeah, that does answer my question. And lastly, I just wanted to understand your breakdown or your composition of fee income and other income. I believe you have segregated them separately. Just wanted to understand what is it exactly.
So fee income is processing fee, and there is other income which was a provision which was done during the first 9 months, and that provision has been written back. So that provision was not required, and that has been written back. So that is the component which has been written back in Q4.
Got it. Perfect. That's all from my side. Thank you so much.
Thank you. Participants, in order to ask a question, you may press star and one. The next question is from the line of Arup Dey, who is an investor. Please go ahead.
What kind of disbursement number are you aiming for over next few quarters? And if you can provide any guidance on that, that would be helpful.
Thank you, Arup, for your question. See, Q3 and Q4 FY25, we've added loan books AUM of about 750 crores per quarter. We currently standing at about 2350 when we close this year, and the number that we're looking at FY26 is 4,000 crores, which is an addition of about 1,600 crores. Run rate per quarter addition is about 400 crores, and we've already showcased that we were doing about 750 crores per quarter. So certainly our target would be to overachieve the 4,000 crore loan book. The disbursements, the gross disbursements would gradually increase when the incremental loan book happens. The average churning days are about 35 days. So when we will be reaching a loan book about 4,000 crores, gross disbursements monthly would be about 3,000 to 3,500 crores.
And about the PAT?
So PAT currently, we've already reached a run rate of about 25 crores per quarter, and we're looking at adding 500 crores per quarter at 4% spread, which will add to this quarterly number. About 10 to 12 crores of addition would happen in this quarter-on-quarter basis. So we're looking at adding about 10 to 12 crores of PAT to this 25 crore run rate.
Okay, thank you.
Thank you.
Thank you, sir. Participants, in order to ask a question, you may press star and 1. The next question is from the line of Gaurav Agarwal, who is an individual investor. Please go ahead.
Hi, Saurabh. Good morning.
Hi, Gaurav. How are you?
All well. How are you? I hope you're doing well.
Yes, Gaurav.
So I'm simply asking, like, we have kept a target of 4,000. Don't you feel like it's very low for a company with a small base? Like, quarterly we are doing around 700 crores and we are keeping our target at 4,000 crores. We should aim for like 6,000 FY26. And as well as I just want to know, like, AMU has increased, but the profit is flat.
Gaurav, Anubhav here.
Yeah, Anubhav.
Yeah. All right. So thanks for showing the kind of conviction in our business model. See, I mean, we come from the values of APL Apollo Group, right? Which is very aggressive, right? But if you look at, if you deep down how we have grown this group, right? So whenever we start something, we take small steps, baby steps, right? Once we are like, fully convinced on the business model, we do the 100% of risk mitigation, then we go full throttle, right? And NBFC finance lending is very serious business, right? So yes, I mean, the opportunity is there to grow this book beyond 4,000 crores, right? But why we have set ourselves this target over the next 12 months, keeping in mind the quality of growth is very important here, right? Because do we have capital available? Yes. Do we have limits from banks available? Yes, to grow beyond this, right? But it's a young business, 2.5 years old, right? We are also every day is a new learning curve for us, right? Even if we add 2,000 crores of additional loan book, right, during this financial year, our net profit run rate, which right now is 100 crores, by the time we end the year, it will grow to 200 crores, right? So we are almost doubling the profit for the company in the next 12 months, right? And then when we add another 2,000 crores in FY27, right, that will give another 100 crores to the PAT. So we are already talking about growing net profit to 300 crores, right, at least the run rate in the next 24 months from current 100 crores, right? So I think this is good enough for the team of 55, which is running the show right now, right? And as the quarter goes, as we ensure that there is no NPA, right? As we ensure there is no delay in the payment, as we ensure the quality of customers, right, does not deteriorate. And like I said, I would like to rehash the kind of groups we are getting attached to, right? Top-notch groups in the country. So we want to ensure that this high growth is coming from the quality of customers, so that the business remains 100% risk-free, or I would say that as much risk-free as possible.
Because my only concern is, like, when our base is so low, and if we grow like with a very low number, then how will we surpass the expectation of the shareholders? Because from last 2 years, we are not generating any kind of return for the shareholders if you look at the performance. If I'm an investor from last 2.5 years and I'm expecting nothing, so I'm getting nothing out of it. So I hope you can understand my concern.
So Gaurav, definitely, your concern is valid, right? And stock price performance is function of a lot of factors, right? Yes, our profit remained flat for FY25 because of the regulatory issues what we faced in first half. Now everyone knows that that is behind us, right? And second half we bounced back so strongly, so sharply.
Yes.
That from here on, the foundation where we are standing, we are talking about tripling our net profit in next 2 years, right?
Yes.
So I guess I would request you to remain patient, right? As you have.
I'll definitely do. But my only one more concern, like why there is a profit flat compared to the last quarter. AUM has grown by 50%, approximately 40-50%. But the profit is flat. Why so? Last quarter it was 23. This quarter also it's 23.
Gaurav, when we started Q3, bank financing was not available. We had access to some very low-cost debt from the group. We had got some support, and that is the reason that there was profit. But Q4, there was no such support available. 100% book was created through bank debt only.
So this was the same loan which was given by the promoter, right, during the first half, right, which got carried forward to quarter 3, which was yes. So Q4 the base is now nominal base, where all the debt is market debt.
Okay.
There is absolutely no support.
There was a support from the promoter side, but this quarter, so we have performed individually as an entity.
Absolutely.
That's right. Because till Q2, promoter had infused debt in the company, right? That was at very low, at very low cost, right? To mitigate that regulatory risk, right? So that continued in the quarter 3, and now quarter 4, the company was on its own. So this performance is as per the market standards.
Sure. Thank you, Anubhav. My only submission is also think from the perspective of shareholder who is with the company from so long, who have already paid so much patience.
Yeah, Gaurav, we are proud to have shareholders like you, right? And we can promise you that we will not leave any stone unturned to perform beyond your expectations.
Thank you, sir. We will take our next question from the line of Nimin Doshi from Geojit PMS. Please go ahead.
Yeah, hi. Thanks for this opportunity. Firstly, just wanted a clarification. Like you mentioned, the other income consists of reversal of provision, right? Am I right?
Yes, please. Yes, Nimin.
And so what is this impairment on financial instrument having a negative figure? I mean, just wanted to reconcile this figure.
So there are two provisions. One was employee benefit, which has been reversed, so that is accounted for in other income. And impairment, there was a provision made in quarter 2 of 5 crores, and that has been written off. So that's a 5 crore write-off that we've done. And post that, this is the profitability number.
Okay, so other income is because of employee provision reversal, and the impairment shows the NPA reversal, right?
Yeah, that's a write back, yeah.
Right.
That's a write-off. That's a write-off of 5.
That's a write-off. Okay, got it.
So
and
provision was already
second, sorry?
Provision was already in place, so that's a write-off. So the provision was already there. Sorry, we can go to the next question, yeah.
Okay, good. Secondly, with respect to NIMs, how are we looking at our NIMs for FY26 and 27, given the fact that there could be possibly 2 more rate cuts?
So, Nivin, how does it work is, that we've been able to extract better interest rates from the bank immediately after the rate cut. But have we passed on the entire benefit to the customers? Answer is no. Some partial benefit has been passed on. So NIMs are expected to be better than earlier when it is a downward cycle. But when we are in the downward cycle and we expect that to continue for some time, we will be on the advantage side because we are cognizant and immediately from the banks we are able to extract better rates. But there is a lag effect when we pass it on to the customers.
Okay. So this 8.5 could come down to, say, for example, 8 or 7.5. However, your yields would reprice with a lag.
I mean, it has already started to happen. Majority of our borrowing now is about 8.25, and this is the average that we were enjoying, that we were getting in the last quarter. It is already down to 8.25 in 8.35 levels.
Perfect. Thank you so much. That's all from my side.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star 1 to ask a question. The next question is from the line of Shubham, who is an investor. Please go ahead.
Yeah. Hello, sir. I'm audible?
Yes, Shubham.
Yeah. So, first of all, congratulations to your team on delivering the right set of numbers this quarter and AM growth and also the ROE focus. Now, my question is to Anubhav, sir. Right? Like, this is a bit long-term question. Like, for the next 5 years, what is the goal of the company? Are we trying to remain, or will we try to remain just in supply chain financing? And what is the market size here? Like, what is the opportunity you are seeing? Or will we more into a bigger NBFC doing multiple things? Like, what is the long-term game that our company is doing here? Thank you.
So Shubham, see, if I have to tell you, right, as a group, when we entered into this business, even we didn't know that the kind of scalability we will see that within like 2-3 years, okay, and the kind of anchors we have been able to add, right. So this gives us confidence that even supply chain funding, okay, on a GDP country economy size of like whatever $3-4 trillion, right? This is a massive opportunity, okay. And the gap, what we see, the current financial institutions are not able to plug, okay. So we see clear gap. We have already given you roadmap for the next 2 years with the loan book target of 6,000 crores. Earlier we used to say 5,000 crores. Now we are telling you 6,000 crores. It's already up, right? Everything goes well, we may end up doing beyond 6,000 crores also, right? But whatever growth will come, it has to come with ROE threshold of 18%, right? So that is number one. Second is, like when we talk about 5 years, right? We believe that the kind of systems, the kind of tech stack we are building, right, to tackle these 45-50 anchors, right? The next leg of opportunity will come when we go downstream, one level below these distributors, right? And we straight away start going and reaching out to the retailers under these distributors, right? So that can open a Pandora box, right, within the same value chain where you are already a part of, and this will not bring any additional risk to our system. It will just open up a massive opportunity, right, within the same value chain without adding any element of risk, right? So I think we are fully committed to keep on innovating, to keep on offering better solutions within this supply chain funding for our customers, right, and keep on segregating the customer base, like from anchor to the distributor, from distributor to the retailer, right? And once you have the data collection throughout the value chain, just imagine the value of this data, which you can eventually monetize also, right? Because you will be knowing the buying patterns of the retailers, right, in a specific industry, right? So I think we are fully committed as a group to keep on growing and expanding operations within this segment, at least for next 5 years.
Okay. Thank you, sir. Sir, one last question. Like, is quick commerce a threat to our business, like in some way, because it will impact the distributors and retailers, the offline retailers basically. So will that be a threat to our business, or we are in the products that can't happen to quick commerce, like electronics and all? Is that a threat?
So that continues in parallel, but this distribution network, some of our distributors also are suppliers to through quick commerce. So I think this supply chain financing is required on quick commerce side also. So it will continue in parallel.
Okay. Yeah. Thank you, sir. Best of luck.
Thank you.
Thank you. Participants, in order to ask a question, you may press star and 1. The next question is from the line of Manish Kela, who is an investor. Please go ahead.
Hi. Good afternoon to all. I have a couple of questions, sir. So one is, your PPT says that the gross NPAs are nil. But if I look at the Q1 results or even the latest results, your footnote says that an amount of 11.4 lakhs has been written off. And during Q1, the amount was 21.69 lakhs. So any reason as to why we say that our gross NPAs are nil, whereas in the footnote we say that there is this much of an amount which has been written off? Is it because we think that the amount is very negligible, and because when you round it off right, it is something like 99.99% is the loan book which is good, and hence the reason? So this is getting very stringent, say, in the past 1.5, 2 years, and they have also taken action on many of the NBFCs, other NBFCs, who were, say, into gold loan lending or someone who had a MFI operation. So while those companies had multiple businesses and were able to probably survive on account of the other businesses, and their MFI or the gold loan business was not lending any money because of RBI regulation, how do we avoid something of this sort happening to us? Or would you say that ours is a kind of a segment wherein the regulator would not intervene because of the kind of a segment or a business that we are in? We are free to determine the interest rate that we charge our customers or the way the repayment is done by them, because there's no evergreening of loans happening. So we are good from that perspective. So these were my 2 questions.
Sure. Thank you, Manish. The first one, this account wasn't an NPA. This account happened, there was a write-off of about 11.4 lakh rupees, which has been taken by us. And that is why it is not considered as an NPA, because the write-off has been considered by us. B, when you talk about RBI being strict on NBFCs, as per our discussions held with RBI officials, trust me, they want to curb down the malpractices in the industry, which is overcharging of customers, unnecessary charges being levied, higher interest rates, etc. Our model just got clearance and all these aspects were checked. B, we charge only interest rate which are nominal between 11 to 13.5%, and some one-time processing fee. There are no other charges which are levied to the customers, and that is the reason that of 2.5 years of operations, we've not received even a single customer complaint, right? And I think the RBI comes strict wherein they see a specific product or a specific segment wherein the customers are being overcharged or they're not being given clarity on the total cost of the money that is being lent to them. So that is where they come out strict.
Further to add on, the amount that is mentioned in the footnote, that is the write-off amount. As a conservative practice, we had an option to classify the same in the NPA, but that as a conservative practice, we have mentioned it under written off amount only. So that is why the NPAs are
Yeah. Thank you. So maybe I was wondering, you can mention that in the PPT also while calling out this amount.
Sure. Thanks, Manish. Sure.
Yes. Thank you.
Thank you. The next question is from the line of Akhilesh Kumar, who is an investor. Please go ahead.
Thank you for giving an opportunity. I wanted to know about the retail book. I think last call you informed us that it will be starting this quarter, you will be doing that. And what is the current book size and what is the target you have in mind for this next year?
Sorry, Akhilesh, can you just repeat it again? Retail, is it?
Yes, retailer, you said that you will be starting disbursing from last March quarter, and whether we have started that already, and what is the target for us in next financial year?
Sure. Akhilesh, so we have started to sign up memorandums or agreements with the large distributors where we will be doing retail, and we've already signed them for 150 to 200 crores, and the penetration is underway, and we will be starting onboarding these customers from this quarter itself. But as on today, we've already got MOU signed up of about 150 crore plus.
Okay, so the target AUM of 4,000 crores for next year, how much percentage of that we are counting for this particular account?
Around 5 to 10%. 5%.
Okay, fine. Thank you. And one more last thing. I saw some unsecured loans in our books from last few quarters. I'm not very familiar with financials. Can you just help on that? What kind of unsecured loans we are having on books?
So these are also supply chain finance loans, but these are to large dealers, distributors, wherein security creation because of being into multiple banking has not been possible, but however we wanted to be part of their arrangements, and that is why we've extended these loans. But these are in normal course of business. These are pretty large dealers where other banks did not wanted us to enter, but I think we are pushing on regular basis to convert these into secured, and we will keep on doing that.
So we don't see any risk here?
No. Because, see, entire funding happens to the dealer, and the material is supplied to, entire funding happens to the anchor, and the material is supplied to the dealer. So, from that ways, we are sure that whatever money we pay directly to Tata Motors or Vedanta, and they supply material to this dealer. And these are pretty large dealers, majorly of Tata, who've been there with them for last 30-40 years, but security creation was an issue.
Okay, and the kind of growth what we are seeing for last 2 quarters, do you think we will stick with our debt equity ratio of 3, or we will go beyond that?
So as of today, we had envisaged that we'll be doing a 6,000 crore book with a 1,500 crore equity base and 4,500 crores of bank debt, which is 1:3. We continue to maintain that.
Okay. Thanks a lot. That's it.
Thank you so much. Thank you.
Thank you, sir. We will take our next question from the line of Jay Vadwan, who is an investor. Please go ahead.
Hello. Yeah, am I audible?
Yes, sir.
Yes, good afternoon. So my main question was around the debt to equity ratio only, but it got answered. So thank you. Great set of numbers, great students. My one single question I wanted to understand was like one of the questions was around how you are not serving the shareholders. My thing is that what extra can you do for shareholders, as in other than performing in the market actually? What does it imply when you say, yes, we will take care of shareholders?
We are in touch with our board to frame a dividend policy. Whenever there is a decision on that, that will be one way of rewarding shareholders. And as of now, the focus of the team is to perform beyond our shareholders' expectations, which will take care of everything.
Yeah, exactly. So that's my point, right? Like your job is to perform on the ground, and the share price is not really in your company. Thank you. Thank you.
Thank you, sir. We'll take our next question from the line of Manish Kela, who is an investor. Please go ahead.
Yeah. I have a couple of other follow-up questions. So, one, what is the percentage of loan book or the business that we get from the group, which includes SG Mart, Apollo Pipes, APL Apollo? Second, since ours is a new business, has anything changed on ground in terms of orders, if any, wherein we had not factored in some of the risks or challenges earlier, but now we think as we do more and more business, right, those sort of our challenges are more evident now.
So, thanks, Manish. So, percentage of business which happens with group, including APL and SG Mart and Apollo Pipes, is less than about 40% now. And if I talk about the incremental business that we do with this group, is about 10 to 15%, and balance 85% to 90% of fresh business happens outside the group only. And about the your second question was about the risk factors that we're seeing when we're moving outside. So I think we've done considerably well when we talk about 60% of the book is outside the group, and we've been able to identify risk and develop mitigants. I think the monitoring tool that I mentioned in the very beginning of the call, that is one such turning point, because we will be able to monitor the cash flows on monthly basis and more data-oriented approach. So as you'll see, it's a 55-member team managing a book of about 2,500 crores and also looking at 4,000 crores. I'm not looking at increasing the employees many more, looking at increasing the employees many more. The only reason is that we've been tech-oriented and data-oriented all throughout our journey, and we'll continue to do that to mitigate our risk, and that's why we keep a full control on the churning days for each of our borrowers. Until the time they are under control, the risk is low. And I think about 35,000 crores of disbursements until now speaks that NPAs are not there. That speaks about the quality of the book.
All right. Thank you, sir. And sir, one final thoughts. I know a couple of participants talked about the stock price, but all that I can say is I have watched this group closely, and ever since the company took over Mungipa Capital, right, there's been a 100x jump in the stock price from 2021. So I have full faith in the company and the group, so I hope you continue to do well going forward as well.
Thank you so much, Manish. Thank you for these encouraging words. Thank you.
Thank you. We'll take our next question from the line of Yash Vardhan Bed, who is an investor. Please go ahead.
Hi, am I audible?
Yes, Yash.
Yeah, could you provide some guidance, one, on the cost-to-income ratios going forward for FY25 and FY26? And second part, if you could just elaborate what is the historical average sanction per customer been and the churn percentage?
So cost-to-income ratio for us has been amongst the best in the industry. We would be in early double digits when it comes to cost-to-income. When it comes to churning days, our entire book rotates between 35 to 40 days.
Yeah, and the customer renewal ratio, sanction renewal ratio?
And the average ticket size, average sanction limit per customer is around 3.5 to 4 crores.
Sure. And what is the renewal ratio for customers every year if the sanction is renewed?
Every year, the limits are reviewed and renewed for the customer.
How many? If you say how many drop out, there is a 5 to 10% churning. Yes, it happens. 5 to 10% churning is there due to competition.
Sure. Thanks. This is helpful.
Thank you. Before we take the next question, we would like to remind the participants that you may press star and one to ask a question. The next question is from the line of Arup De, who is an investor. Please go ahead.
I missed the part about the write-off. Could you explain it?
Sorry, Arup, you'll have to come back with your question again. Your voice wasn't clear.
I missed the part about the write-off. Could you explain it again?
Right. Which part you missed, Arup? Couldn't understand.
Write-off.
Arup, there was one account wherein we had provided for in quarter 2, and we have written off that amount. That was about 11,40,000 rupees.
Okay. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
Thanks, Pooja, and thanks to Kishan and MK for hosting us for this earnings call. And thanks to all the participants. Look forward to see you again next quarter. Thanks so much.
Thank you. On behalf of MK Global Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.